Hi, I'm Matt Dean with RE/MAX Realty Specialist at mattdeanrealty.com. I'm here today to talk about the do's and don'ts of the mortgage approval process. Becoming a homeowner is a lifelong dream for many Canadians. There are so many aspects of purchasing a home that I, as your realtor, will take care of, from finding the home to negotiating a great deal and making sure the home is viable with inspections. However, none of that matters if you can't get a mortgage. Even if you are not a first-time home buyer, rules and requirements change, so it's imperative to seek the help of an excellent mortgage professional. To help you get the most out of the process, here are my do's and don'ts for securing a mortgage. I'm going to start with a don't. Don't number one, don't get pre-approved or view homes over your budget. Do your own calculations. Figure out how much you can afford monthly. Don't forget the other costs associated with homeownership, such as taxes and monthly fees, utilities, rentals, etc. All your decisions moving forward will be based on this monthly amount. This will help you avoid buyer's remorse or being what we call house poor. Even if you are approved for more than the amount that you've predetermined, stay within your comfort zone. This also means not viewing homes out of your price range, even out of pure interest. When you fall in love with homes you cannot afford, the homes in your price range become less appealing by comparison. You could find yourself passing on a home in your price range that you normally would have loved if you had not been comparing it to homes that you can't afford. I'll get back to more don'ts later, but let's get to the do's. Do number one, prepare your documentation in advance. Collecting documentation needed for mortgage pre-approval can take time, so get started early. Ask your mortgage broker what documents you're required to not only get pre-approved, but also to finalize your mortgage. Get everything you can together. Typical documentation can include identification, proof of assets, proof of income, which may include pay stubs or a letter from your employer, or if you're self-employed, you may need notice of assessments. Also, information about your debt. Lenders have access to most of this information, but the more transparent you are, the easier the process. Do number two, apply for your pre-approval first. Many buyers want to start looking at homes right away. It's very exciting. Now, while I don't mind showing homes to buyers while they're in the pre-approval process, it's ideal to have the mortgage pre-approval in hand first. That way we can avoid don't number one. But also, if you find a home you like, you'll want to move quickly. Being pre-approved for a mortgage makes it easier to fulfill a finance condition on time, or possibly remove the condition altogether if you're in competition for a home. Do number two, shop around for a great approval. Just as you'll see several homes before settling on the one, you should shop around for your mortgage as well. Don't just go to your local bank branch and expect to receive a great deal. Do your research. I highly recommend enlisting the help of a mortgage broker. I work with only the best, and I am happy to get you in touch with one. A mortgage broker will not only negotiate the best rate on your behalf, but will also make sure you are getting the right product for you. There is much more to a mortgage than just the interest rates. Do number three, read the fine print. Once you have been pre-approved, your loan officer will send through your pre-approval document. This document will outline the interest rate you'll receive, the loan terms, and the mortgage amount that you've been pre-approved for, and any penalties or extra fees if you are to break the mortgage early. It may look like total financial jargon and Greek to you, but it's important to read the fine print on every page carefully. If you have a family member who's very versed in this, it might be good to get them to take a look. Okay, back to the don'ts. It could be a small oversight or an innocent mistake that can interfere with a smooth closing. So here are some actions to avoid once you have found your home and secured the financing. Don't number two, hold off on any major purchases. Your financial situation must not change from pre-approval to loan finalization. Even if you were initially pre-approved, the lender can still reject your loan if your financial situation changes in any way. To avoid this, don't make any major purchase that change your credit debt service. Don't number three, don't do anything that could affect your credit. Similar to the previous point, don't apply for new forms of credit, like a personal loan, a credit card. Don't co-sign loans for friends or family members. Your debt level and the amount of credit are both factors in a mortgage approval, so increasing them may risk your pre-approval. In fact, don't make any changes to your credit status. Don't number 4, don't quit or change jobs. This seems obvious, but avoid changes in your employment status. Steady and predictable income is crucial to finalizing a mortgage. Changing jobs or becoming self-employed could very well interfere with the final mortgage approval. I'm always here to help and answer any questions you have. Remember, it's all about you. Thanks for listening.